Chapter number 6, ICAI Study Material Questions. Test your understanding. Question number 1. Move Fast Limited is engaged in manufacturing of shoes and slippers located in Bahadurgarh in Haryana. Due to unprecedented rains in the area in the month of September 2022, many areas of the town got inundated due to choking of sewer systems. As a result of the above, the company's premises located in town were also affected, resulting in damage of stocks. The company has lodged a claim with the insurance company for 1 crore, and the same is shown as a claim receivable as on as of 31st March 2023. As the claim was not settled at the year end, the insurance surveyor appointed in the case submitted a report to the insurance company recommending a claim of 45 lakhs in the month April 2023. The company has also given its consent for the same, and the settled amount of 45 lakhs was transferred to the bank account of the company on 15th May 2023. You have just finished performing substantive procedures of the company by the end of May 2023. Is there any responsibility cast upon you as an auditor of the company in the above situation? The given situation provides evidence of conditions that existed at the date of financial statements. Initially, the company has lodged a claim of 1 crore, and the same is reflected as claim receivable in the financial statements as at 31st March 2023. However, subsequent events occurring have provided evidence that claim was settled for 45 lakhs only. Such settled amount has already been accepted by the company by providing its consent. Therefore, such events have provided fresh information about items included in the financial statements. Further performance of substantive procedures have been finished, implying that audit report is not yet issued. Therefore, financial statements as on 31st March 2023 should be adjusted to reflect fresh information emanating from described events, and management should be asked to take appropriate action in this regard so that adjustment pertaining to above is properly reflected in the financial statements in accordance with the applicable financial reporting framework. Next, test your understanding. Question number 2. CA Anuj is the auditor of a listed company, and he is in the midst of conducting an audit of the said company for the financial year ended 31st March 2023. At the meeting of the board of directors held on 17th April 2023, a dividend of 1 crore is proposed to equity shareholders at the rate of rupees 10 per share, and such a proposal has a good chance of being approved in the annual general meeting of the company to be held after a few months. His audit procedures are near completion. He is contemplating finalizing the audit report by 31st July 2023. Is there any responsibility thrust upon him as auditor of the company? In the given situation, dividend has been proposed by board of directors on 17th April 2023. It is an example of condition that arose after the reporting period. No liability exists for the company on reporting date because there is no obligation to pay at the reporting date in accordance with Ind AS 1. Therefore, above situation does not require recognition of above proposed dividend in the financial statements. It is an example of the events which does not require adjustments. However, it should be disclosed in the financial statements in notes to accounts. Therefore, it should be ensured that it is disclosed in notes to accounts in the financial statements. He should verify in accordance with SA 560 that it is disclosed in the notes to accounts. Next, test your understanding. Question number 3. CA Soumya is auditor of a company engaged in rearing of poultry birds and obtaining eggs therefrom. The company has performed very well since its incorporation in 2013. Its sales had also grown, and the company had expanded its market from the native northern states of promoters to far-flung areas in the eastern part of the country. However, since last 2 years, company's fortunes have nosedived. First, due to the effects of the pandemic, and then due to recurrent outbreaks of bird flu thrice in a span of 2 years. The company's sales have dipped from around 50 crores to 10 crores. Further, a major part of its livestock was also wiped off during bird flu. She is not optimistic about the going concern assumption followed by the management. The management now wants to start with new batches of birds. The earlier working capital facilities of the company granted by bank have also been restructured to support the business. She was informed that repayments of restructured working capital term loans are to begin from ensuing year. No fresh credit facilities have been granted by the bank. The company also plans longer credits from animal feed suppliers. The company plans to take additional measures to prevent the safety of livestock, including aggressive vaccination, preventive health checkups, and more frequent visits of veterinary staffs. The villages in surrounding areas have accused the company of spreading air pollution. The management has prepared a cash flow forecast for her examination. Discuss the approach to be adopted by her in examining the going concern assumption, keeping in view above with the specific reference to cash flow forecast. In accordance with SA 570 going concern, if events or conditions have been identified that may cast significant doubt on the entity's ability to continue as a going concern, the auditor shall obtain sufficient appropriate audit evidence to determine whether or not a material uncertainty exists relating to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern by performing additional audit procedures, including consideration of mitigating factors. Where the entity has prepared a cash flow forecast, an analysis of the forecast is a significant factor in considering the future outcome of events or conditions. In the evaluation of management's plan for further actions, it includes evaluating the reliability of underlying data generated to prepare the forecast and determining whether there is adequate support for the assumptions underlying the forecast. In the above situation, cash flow forecast has been prepared by the management. Therefore, she should carefully evaluate assumptions underlying forecast and also reliability of the data to prepare the forecast. For example, she should verify assumption regarding fresh batch of livestock. The bankers have not provided fresh credit facilities. How funds from the same would be arranged, the reasonability of assumption in cash flow forecast needs to be looked into. She needs to check loan sanction letters or agreement to verify when repayments are beginning to see their accuracy in cash flow forecast. The company plans to avail longer credits from animal feed suppliers. In the downturn situation of the company, how would suppliers extend longer credits? This is going to have effect on the cash flow forecast where company has accounted for increased expenditure on preventive health checkup, vaccination, or more frequent visits of veterinary staffs in cash flow forecast. Since villages have accused the company of spreading air pollution, how does the company plan to deal with the same? Whether any proposed expenditure in this regard is accounted for in the cash flow statement. She may also consider other implications of this issue and possible effects on cash flows. Next, Teshio Understanding 4. CS Suraj finds that key financial ratios of the company, like current ratio, debt service coverage ratio, inventory turnover ratio, and trade receivables turnover ratio, are in red and have deteriorated considerably as compared to the last year. The company is also not able to pay to its creditors on time. The company is requesting time and again to its bankers to grant additional credit facilities, but bankers are not listening. There have been significant losses to the company due to the lack of response of the company's products in the market. As a result of it, many products are sold at below cost price. There have been situations where the company is not able to pay the salaries of staff on time. All these negative findings have led him to conclude that the use of going concern as a basis of accounting is not appropriate. He brings this matter to the knowledge of CFO of the company. What is reporting duty cast upon him in such a scenario? The CFO informs him that the management in turn is ready to include in the disclosures The inappropriateness of its use of going concern assumption of accounting. How should it impact the auditor's opinion in case management itself discloses the inappropriateness of its use of going concern assumption of accounting now? If the financial statements have been prepared using going concern basis of accounting, but in the auditor's judgment, management's use of going concern basis of accounting in the financial statement is inappropriate, the auditor shall express adverse opinion. The requirements for an auditor to express an adverse opinion applies regardless of whether or not the financial statements include disclosure of inappropriateness of the management's use of going concern basis of accounting. Therefore, even if management discloses that its use of going concern assumption of accounting is inappropriate, it would have no impact on auditor's opinion. He would need to express adverse opinion. Next, test your understanding 5. Following is the written representation given by RES Limited to its statutory auditors, that is, Mrs. CTK and Associates, for the audit of financial year 22-23. The audit was completed and reported dated 31st July 2023 was issued. Point out if there is any anomaly in written representation reproduced below. 15th April 2023 to CTK and Associates Chartered Accountants. Dear Sir, this representation letter is provided in connection with your audit of financial statements of RES Limited for the year ended 31st March 2023 for the purpose of expressing an opinion as to whether the financial statements give a true and fair view in accordance with the applicable accounting standard in India. We confirm that, to the best of our knowledge and belief, having made such enquiries as we considered necessary for the purpose of appropriately informing ourselves, financial statements, we have fulfilled our responsibilities as set out in the terms of audit engagement dated 17th August 2022 for the preparation of the financial statements in accordance with the financial reporting standards. In particular, the financial statements give a true and fair view in accordance with the applicable accounting standards in India. Significant assumptions used by us in making accounting estimates, including those measured at fair value or reasonable, related party relationships and transactions, have been appropriately accounted for and disclosed in accordance with the requirements of applicable accounting standards in India, SA 550. All events subsequent to the date of financial statements and for which applicable accounting standards in India require adjustment or disclosure have been adjusted or disclosed, SA 560. The effects of uncorrected misstatements are immaterial both individually and in the aggregate to the financial statements as a whole. A list of uncorrected misstatements is attached to the representation letter, SA 450. Information provided. We have provided you with access to all information of which we are aware that is relevant to the preparation of the financial statements, such as records, documentation, and other matters. Additional information that you have requested from us for the purpose of the audit and unrestricted access to persons within the entity from whom you determined it's necessary to obtain audit evidence. All transactions have been recorded in the accounting records and are reflected in the financial statements. We have disclosed to you the results of our assessment of risk that the financial statements may be materially misstated as a result of fraud. We have disclosed to you all information in relation to fraud or suspected fraud that we are aware of and that affects the entity and involves management, employees who have significant roles in internal control, or others where the fraud could have a material effect on the financial statements. We have disclosed to you all information in relation to allegations of fraud or suspected fraud affecting the entity's financial statements communicated by employees, former employees, analysts, regulators, or others. We have disclosed to you all known instances of non-compliance or suspected non-compliance with laws and regulations whose effects should be considered when preparing financial statements. We have disclosed to you the identity of the entities related parties and all the related party relationships and transactions of which we are aware. SA 550, Chief Financial Officer. This above one is Written representation. So we need to discuss about the anomalies in written representation. The date of the written representation shall be as near as practicable to, but not after the date of auditor's report on the financial statements, as the auditor is concerned with events occurring up to the date of the auditor's report that may require adjustment to or disclosure in the financial statements. The written representations are dated as near as practicable to, but not after the date of auditor's report on the financial statements. In the given situation, written representation is dated 15th April 2023. The audit report is dated 31st July 2023. There is a considerable lag between date of written representations and date of audit report. It could signify that all subsequent events after the date of financial statements requiring adjustments or disclosure may not have been adjusted or disclosed in the financial statements by the management. As audit report is dated 31st July 2023, it reflects that auditor has considered subsequent events occurring between date of financial statements and date of auditor's report. However, written representations pertain to 15th July 2023, 15th April 2023, not 15th July, 15th April 2023. Next, case scenario number 1. CS Neha, a partner of Mrs. J and Associates is carrying out a statutory audit of Mrs. ABC Stores Limited for the financial year 22-23, and she is ready to sign her audit report on 1st July 2023. There are some written representations which are pending with the management of the company pertaining to such an audit, and she sent Deepak her article as trainee, who is also a member of the engagement team, to the company's office for collection of the same. On returning back, Deepak tells CS Neha that major stocks of the company got destroyed because of a fire in their plant on 27th June 2023, and it has affected the company's operations badly. However, the business operations are likely to be resumed by the management at an alternate place. CS Neha postponed the issuance of the audit report to consider the impact of such an event on the financial state of affairs of the company. He wants the management to disclose the impact of this unfortunate event in the financial statements for the year 22-23, to which management is disinclined. After the management's refusal, she issued her audit report on 15th July 2023. The management of the company seeks an appointment from CS Neha to discuss an important matter on 20th July 2023. They informed her that the company has lost a lawsuit filed against by it by one of the creditors on 18th July 2023 in a fast track court, and now the company has to pay the plaintiff a huge amount of 2 crores. The events causing this lawsuit arose after 31st March 2023. CS Neha is a bit perplexed, and her first question to the people from the management visiting her office was whether audited financial statements have been made available to any third parties or filed with the regulator. The management responded negatively. Now, CS Neha wants them to amend the financial statements to include the impact of this lawsuit on the financial affairs of the company. This time, they agreed and amended the financial statements accordingly to cover the impact of both the events, that of the fire in the plant and lawsuit and losing the lawsuit. But they requested CS Neha to issue a new audit report against the earlier one dated 15th July 2023. The management amends the financial statements, which are finally approved on 25th July 2023. CS Neha issues a new audit report. Considering the above situation, answer the following questions. What should be the appropriate date of signing the audit report? First option, 20th July 2023, anytime between 15th July 2023 and 18th July 2023, on or after 25th July 2023, anytime between 15th July 2023 and 25th July 2023. Answer is C, on or after 25th July 2023. That means the management amends the financial statements which are finally approved. Finally, approval date was 25th July. So, on or after 25th July 2023 is the appropriate date of signing the new audit report. Next, CS Neha would have taken into account a lot of procedures to get knowledge of the events occurring after the balance sheet date up to the date of auditor's report relating to the company. Which of the following does not fall under such audit procedures as per SA 560? Obtaining an understanding of the management procedures set up to identify subsequent events, inquiring of the management with respect to the occurrence of any such subsequent events, reading the minutes of the meetings of the board held after the balance sheet date during this period, getting the interim financial statements prepared till the date of audit report mandatorily as a condition to issue the audit report. Option D is correct, getting the interim financial statements prepared till the date of audit report mandatorily as a condition to issue the audit report. Next, with respect to first audit report dated 15th July 2023, which type of opinion was most likely provided by her? Modified opinion, unqualified opinion, disclaimer of opinion, including a statement in emphasis of matter or other matter paragraphs. Option A is correct, a modified opinion. With respect to new audit report issued, which type of opinion is most appropriate? Disclaimer of opinion, unqualified opinion, adverse opinion, unqualified opinion, and the statement in emphasis of matter paragraphs or other matter paragraphs. Option D is correct. That is unqualified opinion and a statement in emphasis of matter paragraphs or other matter paragraphs. Next, the fire event occurring on 27th June 2023 in the company's plant requires the following action on part of the management: disclosure in notes to accounts, adjustment in financial statements, waiting for the insurance company to settle the claim, preparing financial statements afresh. Disclosure in notes to accounts is required regarding that fire event occurring on 27th June 2023. Next, case scenario number 2. CA Namit, a partner in Messrs. J and Associates, is carrying out a statutory audit of Messrs. XYZ Gears Limited for the financial year 22-23 and is in the process of issuing an audit report. His article trainee, Manpreet, is very curious about knowing the various facts relating to the consideration of standards on auditing while carrying out an audit and issuing the audit report. She asks CA Namit about the relevance of the going concern assumption in their audit and further reporting, to which CA Namit explains to her that both parties have got their own responsibilities with respect to this accounting assumption. The management of the company has its own set of responsibilities, while reporting upon the same is a very strict and sensitive matter for the auditor as per the requirements of relevant standards on auditing. He tells Manpreet to prepare a list of procedures as she thinks that an auditor should carry out when he identifies that the company is facing a downfall in the business never seen before due to newer technology in the market and other competitors having sprung up swiftly, swiftly adopting new technology. He finds that this condition may cast significant doubt on the company's ability to continue as a going concern. Manpreet thinks and researches and hands over a list of procedures to CA Namit for a final discussion. CA Namit clarifies accordingly. CA Namit concludes that the use of going concern basis of accounting is appropriate in this company's case, but a material uncertainty exists as to the future prospects of the current business. However, the management has made an appropriate disclosure with respect to such a material uncertainty in the financial statements. Manpreet's list of audit procedures includes requesting management to make its assessment relating to the company's ability to continue as a going concern, evaluating management's plan of future actions, make a specific assessment of the company's ability to continue as a going concern, analyzing the cash flow forecast of the company, considering the additional facts or information available since the date of management's assessment, make appropriate disclosures in the financial statements in connection with going concerns, requesting written representation from management regarding the plan of future actions and the feasibility of these plans, writing a para addressed to the stakeholders in the audit report, citing the results of the procedures adhered to related to the going concern assumption. Keeping in view above, answer the following questions. CA Namit tells Manpreet about the auditor's responsibilities in the above case on the matter under discussion. Which of the following does not fall under the auditor's responsibility? Obtain sufficient and appropriate audit evidence on the matter under discussion, conclude on the appropriateness of the management's use of going concern, assessing whether a material uncertainty exists about the company's ability to continue as a going concern, guarantee the company's ability to continue as a going concern based upon his audit processes. Option D is correct. Guarantee the company's ability to continue as a going concern based upon his audit procedures. Next, identify which set of audit procedures are relevant in the above case scenario as per the list prepared by Manpreet. Option A is correct. That means first, requesting management to make its assessment relating to the company's ability to continue as a going concern is correct. Next, evaluating management plans of future action is correct. Analyzing the cash flow forecast of the company is correct. Considering the additional facts or information available since the date of management assessment is correct. Last, requesting written representation from the management regarding the plans of future actions and the feasibility of these plans is correct. Next, CA Namit's conclusion in the above case will lead him to give which type of audit opinion from the following: unmodified opinion and a separate section material uncertainty with respect to going concern in his audit report is required. That means option D is correct. Next, consider the following statements. Statement number 1: the management is under a responsibility to make a specific assessment of the company's ability to continue as a going concern. Statement number 2: the management is under a responsibility to make appropriate disclosures in connection with the going concern in the financial statements. Here, the both statements are correct. Option C is correct. Which of the following is most appropriate regarding going concern assumption? It signifies that company is reflecting net losses in its financial statements. It signifies that company is not modernizing its plant and machinery. It signifies that company has no intention of curtailing materially the scale of its operations in the foreseeable future. D, it signifies that assets are likely to be recorded at the prices they would fetch. Option C is correct. It signifies that company has no intention of curtailing materially the scale of its operations in the foreseeable future. Next case study. Infinity Hospitality Private Limited was established in 1996 and was in the business of running hotels in tourist destinations in the state of Kerala. It took leased properties on long-term leases ranging from 10 years to 12 years, most of with a lock-in of whole term. The terms did not cover the force majeure clause. The company was family-owned business and has created a good reputation as value for money budget hotel. Most of the time, hotels clocked 60% to 70% occupancy rate, and during the festive seasons or vacations, hotel business clocked 100% occupancy. The capital structure of the company was debt oriented and over leveraged. Primary working capital was blocked in maintaining and upkeeping the leased properties, running the restaurant, leases, foods and beverages, salary, directors' remuneration, etc. The owners looked at the business as a cash cow and did not plug back the funds to expand the business, but were content with the decent profits the hotels were generating. As the properties were leased and not owned, most of the cash flow generated from operations was used in servicing the property and huge loans from the financial institutions. What was left was withdrawal as directors' remuneration and dividend. Everything was going on smoothly. However, there was flash floods in Kerala due to unprecedented rains. There were landslides and roads were blocked. The entire tourist season was washed away due to the infrastructural challenges. Accessibility to resorts and hotels was badly hindered. Logistic support took time to reach in far-flung areas. Visits to the God owns country was last on the mind of tourists. The company was hardly trying to get back to some semblance of normalcy when pandemic struck. It was double whammy for the company. The impact on tourism and travel and hospitality business was very severe. The management of Infinity Hospitality Private Limited believed that bad days would end soon and the business would be back to normal. They also were optimistic about the government coming up with the support for the industry and were hopeful of negotiating with lessors and financial institutions for relief. They decided on humanitarian grounds not to terminate the employees and continued paying them a regular salary, maybe differing 25% to be paid after 1 year. The immediate fallout was on the top line as suddenly the business stopped. The auditors, Mrs. XYZ and Associates, were conducting the audit of the company and were grappling with the situation and are seeking your guidance for the course of action they need to follow. Theoretical questions based on the case scenario, you are required to provide your answers to the following. What additional audit procedures must the auditor undertake as per the requirements of SA 570 based on the facts given in the case? In the given case scenario, the events and conditions have been identified which cast significant doubt on the entity's ability to continue as a going concern. The auditor needs to obtain sufficient appropriate audit evidence to determine whether or not material uncertainty and gather evidence including of mitigating factors. It can be done by performing following additional procedures: analyzing and discussing cash flow, profit, and other relevant forecast with management, analyzing and discussing the entity's latest available interim financial statements, reading the terms of loan agreements, and determining whether any have been breached, reading minutes of meeting of the shareholders, those charged with governance, and relevant committees for reference to financing difficulties, inquiring of entities' legal counsel regarding the existence of litigation and claims and the reasonableness of the management's assessments of their outcome and the estimate of their financial implication, confirming the existence, legality, and enforceability of arrangements to provide or maintain financial support with related and third party, and assessing the financial ability of such parties to provide additional funds, performing audit procedures regarding subsequent events to identify those that either mitigate or otherwise affect the entity's ability to continue as a going concern, confirming the existence, terms, and adequacy of borrowers' borrowing facilities where management has not yet performed an assessment of the entity's ability to continue as a going concern, requesting management to make its assessment, evaluating management's plan for further actions in relation to its going concern assessment, whether the outcome of this plan is likely to improve the situation and whether the management's plan are feasible in the circumstances. Evaluating management's plan for further action may include enquiries of the management as to its plan for future action, including, for example, its plan to liquidate assets, borrow money, or restructure debt, reduce or delay expenditure, or increase capital, considering whether any additional facts or information have become available since the date of which management made its assessment, requesting written representation from the management, and where appropriate, those charged with governance regarding their plans for future actions and the feasibility of these plans. Next, next question number two. According to your judgment, which risk assessment procedure should the auditor consider for arriving at the conclusion based on the management assertion of the entity being going concern? When performing risk assessment procedures as required by SA 315, the auditor shall consider whether events or conditions exist that may cast significant doubt on the entity's ability to continue as going concern. In so doing, the auditor shall consider whether the management has already performed a preliminary assessment of the entity's ability to continue as a going concern. The auditor shall discuss the assessment with the management and determine whether management has identified events and conditions that individually or collectively cast significant doubt on the entity's ability to continue as a going concern, and if so, management's plan to address them. The auditor shall specifically draw attention of the management on the following events or conditions and get the response on how they plan to address them. The company is debt heavy and over leveraged. The leased properties are having considerable lock in period, with the absence of force majeure clause. There are no contingency reserves available with the company. All these factors shall be taken into account while performing risk assessment procedures. Next question, question number 3. What should be the approach of the auditor if the management agrees that the material uncertainty exists, but the entity is going concern? Also discuss reporting requirements. If the auditor concludes that management's use of going concern basis of accounting is appropriate in the circumstances, but a material uncertainty exists, the auditors shall determine whether the financial statements adequately disclose the principal events or conditions that make a significant doubt on the entity's ability to continue as a going concern, and the management's plan to deal with these events or conditions, and disclose clearly that there is a material uncertainty related to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern, and therefore that it may be unable to realize its assets and discharge its liabilities in the normal course of business. The disclosures may include management's evaluation of the significance of the events or conditions relating to the entity's ability to meet its obligations, or significant judgments made by the management as a part of its assessment of the entity's ability to continue as a going concern. Discloses about the magnitude of potential impact of the principal events or conditions and the likelihood and the timing of the occurrence. The auditor shall express an unmodified opinion, and the auditor's report shall include a separate section under the heading Material Uncertainty Relating to Going Concern to draw attention to the note in the financial statements that discloses the events or conditions and state that these events or conditions indicate that a material uncertainty exists that may cast significant doubt on the entity's ability to continue as a going concern, and the auditor's opinion is not modified in respect of the matter and how the matter was addressed in the audit. Next, question number 4. What if the auditor believes, on the basis of his additional audit procedures conducted, to conclude that the entity is not a going concern, but the management is not accepting the same? What course of action the auditor needs to undertake? If management has prepared financial statements using the going concern assertion, to which auditor differs as according to his judgment, the going concern assertion by the management is not appropriate, then the auditor is required to express an adverse opinion. Next, question number 5. What kind of written representation does the auditor need to obtain in case of a scenario covered in Q3 above? Question number 3 is, what should be the approach of the auditor if the management agrees that material uncertainty exists, but the entity is a going concern? In such a situation, what kind of written representation that the auditor needs to obtain? The auditor needs to obtain written representation from the management and, where appropriate, those charged with governance regarding their plans for future action and the feasibility of these plans. Next, MCQs. MCQ number 1. Which of the following is not a financial event or condition that may cast significant doubt on the company's ability to continue as a going concern as per SA 570? Change in credit to cash on delivery model with suppliers, arrears or discontinuance of dividend, opening of new chain of hotels by a renowned competitor near the entity's area, adverse key financial ratios. Option C is correct. Opening a new chain of hotels by a renowned competitor near the entity's area. This is not a financial event or condition that may cast significant doubt on company's ability to continue as a going concern as per SA 570. Next, please choose the mitigating measure as the management is unable to pay lease rentals. Cancel the lease, restructure the lease agreement and negotiate for deferment and relief, terminate the employees and pay the lesser, all of the above. Mitigating measure is restructure the lease agreement and negotiate for deferment and relief. Which one of the following is not a responsibility of the auditor relating to communicating events or conditions identified that may cast significant doubt of the entity's going concern assertion? Perform additional audit procedures to identify events or conditions beyond 12 months from the date of the financial statements, whether the events constitute a material uncertainty, the adequacy of the related disclosures in the financial statements, the implications for the auditor's report. Option A is correct. Perform additional audit procedures to identify events or conditions beyond 12 months from the date of financial statements. Written representations need to be mandatorily obtained from CFO, Chief Financial Officer. Next, which of the following is not main pillar of written representation? A written representation provides sufficient appropriate audit evidence. This is not the main pillar. The management responsibility for the preparation of financial statements, okay. Assertion related to completeness is okay. Assertion related to access to data and information is okay. Written representation provides sufficient appropriate audit evidence is not the main pillar of written representations. Next, test your knowledge. Question number 1. R and Co are the auditors of XYZ Company Limited for the year ended 31st March 2023. The audit report for that year was signed by the auditors on 5th May 2023. The annual general meeting was decided to be held during the month of August 2023. On 6th May 2023, the company has received a communication from the central government that an amount of 5,800 crores kept pending on account of incentives pertaining to the financial year 22-23 had been approved, and the amount would be paid to the company before the end of May 2023. To a query to CFO of the company by the board, it was informed that this amount had not been recognized in the audited financial statements in view of the same not being released before the close of the financial year, and due to uncertainty of the receipt. Now having received the amount, the board of directors wished to include this amount in the financial statements of the company for the financial year ended 31st March 2023. On 8th May 2023, the board amended the accounts, approved the same, and requested the auditor to consider this event and issue a fresh audit report on the financial statements for the year ended 31st March 2023. Analyze the issues involved and give your views as to whether or not the auditor could accede to the request of the board of directors. Facts which become known to the auditor after the date of auditor's report but before the date of financial statements are issued. As per SA 560, subsequent events, the auditor has no obligation to perform any audit procedures regarding the financial statements after the date of auditor's report. However, when after the date of auditor's report but before the date of financial statements are issued, a fact becomes known to the auditor that had it been known to the auditor at the time of auditor's report may have caused the auditor to amend the auditor's report. The auditor shall discuss the matter with the management and, where appropriate, those charged with governance, determine whether the financial statements need amendment, and if so, inquiry how management intends to address the matter in the financial statements. If management amends the financial statements, the auditor shall carry out the audit procedures necessary in the circumstances on the amendment. Further, the auditor shall extend the audit procedures and provide a new auditor's report on the amended financial statements. However, the new auditor's report shall not be dated earlier than the date of approval of amended financial statements. In the instant case, XYZ Company Limited received an amount of rupees 5,800 crores on account of the incentives pertaining to the year 22-23 in the month of May 2023, that is after finalization of the financial statements and signing of the audit report. Board of Directors of XYZ Limited amended the accounts, approved the same, and requested the R&Co auditor to consider this event and issue a fresh audit report on the financial statements for the year ended 31st March 2023. After applying the conditions given in SC 516, R&Co can issue new audit report subject to date of audit report, which should not be earlier than the date of approval of the amended financial statements. Next, test your knowledge. Question number 2. Mrs. Airlift Limited, carrying on the business of passenger transportation by air, is running into continuous financial losses as well as reduction in sales due to stiff competition and frequent breakdowns of its own aircrafts. The financial statements for the year ended 31st March 2023 are to be now finalized. The management is quite uncertain as to its ability to continue in near future and has informed the auditor that having seized of this matter, it had constituted a committee to study this aspect and to give suggestions for recovery, if any, from this bad situation. Till the study is completed, according to the management, the issue involves uncertainty as it is as its ability to continue its business, and it informs the auditor that the fact of uncertainty clamping on the going concern would suitably be disclosed in the notes to accounts. State the reporting requirements, if any, in the independent auditor's report in respect of this matter. Reporting requirements in case of uncertainty clamping on the going concern. As per SF 570 going concern, if the auditor concludes that management's use of going concern basis of accounting is appropriate in the circumstances, but a material uncertainty exists, the auditor shall determine whether the financial statements adequately disclose the principal events or conditions that may cast significant doubt on the entity's ability to continue as a going concern and the management's plan to deal with these events or conditions, and disclose clearly that there is a material uncertainty relating to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern, and therefore that it may be unable to realize its assets and discharge its liabilities in the normal course of business. If adequate disclosure about the material uncertainty is made in the financial statements, the auditor shall express an unmodified opinion, and the auditor's report shall include a separate section under the heading Material Uncertainty relating to going concern to address to draw attention to the note in the financial statements that disclose the matters set out above and state that these events or conditions indicate that a material uncertainty exists that may cast significant doubt on the entity's ability to continue as a going concern, and the auditor's opinion is not modified in respect of the matter. In the instant case, Mrs. Aircraft Limited is running into continuous financial losses as well as reduction in sales due to stiff competition and frequent breakdown of its own aircrafts, and management of Aircraft Limited is uncertain as of its ability to continue in the near future. Therefore, a committee has been constituted to study this aspect. Until the time study is completed, management accordingly decided to suitably disclose this aspect in notes to accounts. Therefore, the auditor should disclose all the material uncertainty and express an unmodified opinion, and his audit report shall include a separate section under the heading Material Uncertainty relating to going concern to draw attention to the note in the financial statements that disclose the matter set out above and state that these events or conditions indicate a material uncertainty exist that may cast significant doubt on the entity's ability to continue as a going concern, and the auditor's opinion is not modified in respect of the matter. Next, test your knowledge question number 3. Test your knowledge question number 3. P&Co is the statutory auditor of Make My Journey Limited. The company is in the business of tours and travels. Annual turnover of the company is INR 2000 crores and profits are INR 190 crores. During the planning meeting of the management and the auditors, it was discussed that the management needs to provide written representation letters to the auditors for the preparation of financial statements and for the completeness of the information provided to the auditor. At the time of closure of the audit, there has been some confusion about the requirements of the written representation letter. Management argued that representation need not be written. It can be it can also be verbal, which has been provided to the audit team during the course of their audit. Auditors have completed their documentation, and hence, in a way, representation based on verbal discussions with the auditors has also got documented. Auditors explained that this is mandatory to obtain written representation in accordance with the requirements of SA 580. However, still some confusion remains regarding the date and period covered by the written representations. You are required to advise about the date of and period covered by written representations in view of SA 580. As per SA 580, written representations, as written representations are necessary audit evidence, the auditor's opinion cannot be expressed and the auditor's report cannot be dated before the date of written representation. Furthermore, because the auditor is concerned with events occurring up to the date of its auditor's report that may require adjustment to or disclosure in the financial statements, the written representations are dated as near as practicable to, but not after the date of the auditor's report on the financial statements. In some circumstances, it may be appropriate for the auditor to obtain a written representation about a specific assertion in the financial statements during the course of the audit. Where this is the case, it may be necessary to request an updated written representation. Written representations are for all periods referred to in the auditor's report because managements need to reaffirm that the written representation it previously made with respect to the prior periods remain appropriate. The auditor and the management may agree to form a written representation that updates written representations relating to the prior periods by addressing whether there are any changes to such written representations and, if so, what they are. Situations may arise where current management were not present during all periods referred to in the auditor's report. Such persons may assert that they are not in the position to provide some or all of the written representations because they were not in the place during the period. This fact, however, does not diminish such persons' responsibilities for the financial statements as a whole. Accordingly, the requirements for the auditor to request from them written representations that cover the whole of the relevant period or periods still applies.